predicts that consumers will get even more frugal this year. Gerald Storch is a longtime retail CEO known for leading Toys R Us, Hudson's Bay. He now runs Storch Advisors. Jerry, welcome. Good to have you with us. As I look at the Abercrombie & Fitch report and to a lesser degree a couple of the others, I got these weren't bad reports, but the stocks are getting pummeled.
No, the results overall are mixed. I mean, the consumer has not gone away, but the gap between winners and losers has never been starker because consumers are very selective and looking for value in everything they buy.
So where are they finding it? And there you see Chewy, the pet, talking about pet snacks. There you go. But Abercrombie & Fitch down 17%. Did they deserve that based on what they said? I thought they even raised some of their forward guidance.
Hey, they're up 89% year to date at Abercrombie. And Fran Horowitz is one of the best merchants in the world. She has turned that brand around. It was a disaster. Having said that, when she says it's going to be tough in the second half of the year, you better believe it.
Jerry, when I look at the names that you cover and the names that you could talk about, is it coming out of the pandemic, was it a supply chain issue? Is it now? Well, the difference between winners and losers, is it an inventory management system? How are we gauging who's best in breed, or is it just size now?
Size is really important. It's not the only thing, but look at some of the winners and how much they've won. Walmart is now worth over $600 billion. When we talk about each of these other companies we're talking about a few $billion here and there, single-digit market caps, and Walmart's worth $600 billion, and they're up 45% year to date. Costco's another giant mega retailer that's way up. They're capturing massive market share. And all these other companies we talk about, they're really rounding errors when you look at the size of the retail market. TJX, off-price retailer, way the heck up. They're worth $135 billion. Think about that when Target's worth something like $72 billion. That's where it's going. It's not that retail has suddenly disappeared. It's that there's some huge winners who are just gobbling up all the market share.
So it's the value aisle where the money's going, the Walmarts, the TJX, the Costco, Bonawyn?
So, Jerry, speaking of value, what should we look for in terms of promotional activity? I read through your note, and it looks like at least some of these guys have been able to carry a much lighter than historical inventory preparing for this. So what type of read-through should we look for in terms of promotional activity going forward?
That's a great question, and they have been very careful because a lot of people got burned coming out of the pandemic when they had way excess inventories. Unfortunately, as sales have slowed down a little bit here, you've seen some people where the inventory has been growing faster than sales, and that's a warning sign that the fourth quarter could be quite promotional. I think that's overhanging this market in general, particularly in categories like apparel, where markdowns will just kill you, places where you can't get rid of the product very easily.
I want to get to Lulu in a moment, but Guy has a question.
Yeah, real quick, Jerry. I mean, I understand historically we're still low in terms of the unemployment rate, but it's the rate of change. At what rate do you get concerned? Because I'm one of these people that think, we're going to see 4.85% unemployment by maybe the spring of next year. What are your thoughts on that and the importance of that?
I think it's very important. And I would say I've been a little more negative than most people for quite a while. And the reason is those retail sales reports we all talk about are not inflation adjusted. So when retail sales are up by 2 or 3% year over year, that's 100% of it's just inflation. So the consumer is spending more and getting less. And as we round the corner here, if what we see is that unemployment rises and sales start to falter a little bit, look how many people reported negative sales today, whether they were up or down. That's just versus what was expected. But someone like Kohl's reporting a -5 same-store sales and saying it's going to stay that way for the rest of the year. If that keeps going, then I think we could see even more of a gap here between the winners and losers. Again, I think the names I mentioned are really safe. Walmart, Costco, TJX, Amazon, by the way, I'd add that. These are value players that are just eating more market share if things get tougher. But I think the broad base of the market may be in for some hurt.
Talk to us about one that is really not in that value space, and that is Lulu, which comes out tomorrow, Lululemon.
Again, just spectacular merchant. I love buying their stuff. I think the quality is very high. But if you shop there recently, I think it's very expensive. And the problem with that, it doesn't play very well in a value-based world. So I think where they've run into a little bit of trouble is that discordance between what the consumer is looking for and their fantastic product. that they have, but at a very high price. So I wouldn't want to pick what we're going to see tomorrow. I would just say they've been down sharply. I think a big part of that is just, they've been raising prices, and that's been hurting people. Even luxury brands, have been hurt, like someone like a Burberry or something, where they raise their prices just too far, and the market couldn't absorb it in this environment.